Didn't get a good hold of that one. Come on, Corsair! Come on, Corsair! Well guys, today we are going to go back in time and review CORSAIR Gaming. Now this one was a popular stock. It actually had some good fundamentals behind it. Definitely benefited from the COVID shutdown, and now some stuff to go over here, guys. A lot of different ways we can look at this one. They've acquired a lot of businesses, but their main focus is computer peripherals, which is just a fancy way of saying devices that connect to your computer, your mouses, your headphones, your cameras, all those external devices. Throughout the years, CORSAIR Gaming has made some nice acquisitions, Elgato being one of them, Scuff Gaming, iDisplay. Now this one has definitely fallen much like a lot of the other stocks in the market, but this one more so, as the 52-week high in this one is $32.18, while the 52-week low is $12.54, which it recently hit. By the way, if you're new to the channel, welcome in, consider subscribing and smash that thumbs up. As far as quality goes, I think that they have very good quality. I see their stuff on the shelves, and you know, they're definitely a player in the game. When we look at the forecast for the company, we have everything from a $15 price target all the way up to almost a $30 price target here. Now, I definitely had some red flags in CORSAIR Gaming throughout the last couple quarters, which is a reason why I haven't covered the stock in some time. But after this recent sell-off, going from almost $50 over the last 18 months down to $12, I think it's time to take a second look at CORSAIR Gaming. As we can see here, top line growth for the company has been pretty strong, and along with that, they have some good cash flow up until recently. Cash flow was at -$8 million, popped up to $28 million, and then during the pandemic jumped up to $159.9 million of free cash flow, a 469% gain, and then from 2020 to 2021 came crashing down. So what we're looking at is the recent quarterly report, and as we saw from 2020 to basically 2021, CORSAIR was selling at a pretty high rate, and that wasn't sustainable, as this seems to be a benefit from the lockdown, guys. And how we can confirm that is the recent quarterly report. They basically went from $529 million down to $380 million. That is a big dip, guys. And when we look at gross profits, almost cut in half, equating to a net income of negative $2.8 million versus the year prior of almost $47 million. This is a huge difference and definitely signals red flags. So we can start seeing why the company has been selling off since its last earnings report. When we look at gaming and creator peripherals, they came down. We look at gaming components and systems, that came down as well. Guys, not only did everything come down, but margins came down pretty drastically here. Over 22% dip in total margins, guys. We see a pretty good dip in accounts receivable and a dip in cash and restricted cash. Those are two areas on the balance sheet you want to see growing. Now guys, I want to point out a few things here. Analyst expectation on Yahoo have about a 4.8% growth rate for CORSAIR Gaming over the next 5 years, and they currently have almost a 28 PE ratio. So there, in my opinion, could be some more downside just by looking at this really quick. When we go to stock analysis, we can see here that this year is going to be pretty rough, but they're looking like they're going to do double-digit growth going forward. Guys, I'm going to probably use something in between, maybe a 6% to 7% type of growth rate for CORSAIR Gaming here. When we compare their margins to the industry standard, 25% gross margins, and they've come down even more from there. They're sitting right around 23% gross margins, as we saw. Not really competitive with the sector median here, and then the EBITDA margins are sitting closer to 4% right now, but we're going to assume that inflation is hitting them pretty hard and that they can have an opportunity to grow their margins. So I know a lot of people might not like hearing this. Historically, guys, at the trailing 12 month right now, CORSAIR is expensive. It's trading at almost a 27 PE ratio in a contraction period of an economic cycle. That is fairly expensive, guys. Forward PE is historically about right, guys. And as we can see here, enterprise value to EBITDA has completely dropped off, going from 72 down to 13.77. Let's take a look at what the sector median is. I think using a 13 EV to EBITDA makes a lot of sense here. So as we can see here, using a 13 multiplier, we get about a $24 to $25 price target for CORSAIR Gaming out in 2030, and a fair price target of about $13 per share. It's currently trading at $13.53, so kind of in line of where I think it should be as far as trying to get a double-digit return. Yahoo has this stock undervalued with roughly 21% estimated return, so undervalued about 21%. Obviously, guys, the stock has done nothing but go down, so you have to be cautious with this one. Definitely a lot of red flags here with CORSAIR Gaming, so I would probably build a little bit more safety in this myself, guys. I would probably use a little bit more safety and require about a 15% rate of return, which means about between $10 to $13 is probably where I would be looking to enter this stock. As margins seem to be compressing, they had a massive pullback from the pandemic, and guys, to be honest with you, the margins are very concerning with the company. These margins are very, very slim. But they do have a lot of acquisitions that could pay off as well. There's definitely a high risk, high reward with this stock, which makes them somewhat interesting, especially when we think of which makes them somewhat interesting, especially when we think about the current levels that they're at. I think this $13 mark could make a lot of sense. So guys, this is my dive into CORSAIR Gaming. Hopefully you all enjoyed that, and we will see you next time, investors. Peace.